So hey, I'm Phil, welcome back to the channel, Grow Your Dough. If you've been following along so far, you'll know that I use a factor-based investing approach. And if that means nothing to you, then check out the link up above, which will point back to one of the videos I made, and hopefully that will give you a good overview of how factor investing works. So in the previous video, we looked at how an investing strategy could be compromised by the type of broker you choose, the broker account, and the transaction fees associated with it. In this video, we're going to be looking at the stock screening process, finding out if your broker supports the stocks that you've selected, and then building an allocation of 20 stocks and how we're actually going to go off and buy them. And then in the next video, we'll actually go through the process of actually purchasing them. So we're really close now. So let's crack on with this one and see how far we can get. Okay, so here we are on the Stockopedia homepage, and I'm logged in with a UK focus, and I'm going to go over and look at the StockRank screen. So here we are on the StockRank screen, and remember that StockRank is a blend of quality, value and momentum factors. There's a few rules. The StockRank must be greater than 40, and the market cap of the company must be over 10 million. And then the results are ordered by StockRank. This screen gives performance since inception of 271%, and on average selects stocks that are of StockRank of 99. And here's the results as we scroll down, and you can hover over each one to get a summary of the organization, the company. We're going to scroll down to the bottom now, and you can download this file to your computer, and we're going to download it as an Excel file. And then we'll carry on and process that file. So here we are looking at the Excel spreadsheet, and I'm going to speed things up and just tidy up the spreadsheet just quickly. What you get in the spreadsheet is a ticker, the company name, the size of the company, the stock rank, which sector they're in, and a couple of extra columns that we'll come back and look to at another time. So earlier on we looked at the different types of brokers and the availability of stock, and so I'm just going to put in 3 columns here, one for a basic free trade account, one for the plus account, and one for AJ Bell. And we're going to use that to assess which stocks are available through our different platforms. The next thing I'm going to do is just quickly whip through and remove any companies that are in the financial sector that supply trusts or funds. Basically, a trust or a fund is a collection of stocks like we're building in our portfolio. So we don't want to re-buy into that idea because that's already what we're doing. So all I'm doing is just scanning through, looking for the words trust or fund in the financial sector, and I'm removing them. Okay, so now we're ready to look at whether our broker will let us buy the particular candidates that we've identified. So here I am on the free trade platform. You can see down the bottom is the discover button, so I'm going to click on that to search for the stocks. And the first stock we want to search for is Expo. So I put in the ticker, and there it is at the top of the list. I select it, and it says I'm able to buy it. Go back into my spreadsheet, highlight the Expo thing for free trade and free trade plus, and mark it as good green. The next one is Gattaca, GATC. I search for it, and you'll notice this time it's highlighted with the plus symbol. Down the bottom you can only buy if it's on plus. We go back to the spreadsheet, say that it's not available on free trade, but is available on free trade plus. I'm going to go back and do Sylvanian Platinum. Make sure you're picking the right ticker here, because there's 2 SLPs. One is for a British stock, one is for an American. Check the name and check the ticker, Sylvanian Platinum. But again, this stock is only available on plus. So we'll go back into the spreadsheet and update it accordingly. The next one is OPG Power Holdings. So I search for OPG. I'm looking carefully now, and I cannot find OPG. So that stock is not available on free trade via either platform. So go back into the spreadsheet, update it, and I'm going to mark it as bad. I'm going to go through the whole list here, but I'm not going to bore you by doing that, so I'm going to whip through it and I'll come back in a minute when I'm done. So here's the updated list. and I've updated it for Free Trade Basic, Free Trade Plus and AJ Bell. And what you can notice is there's a lot of availability for AJ Bell. Not bad for Free Trade Plus and a bit scarcer for Free Trade. So what I've done here is consolidated the selections, the top 20 selections from each broker platform slash account type. So you can see on the left is the Free Trade Basic, 20 stocks with a range of market caps and stock ranks. The average market cap is 8,160. The average stock rank is 96. That's okay, that's good. Missing out on some of the smaller companies is what I'd say. And then the Free Trade Plus account, there's your list of 20 tickers for 20 companies. Again, stock rank from 100 down to 97 with an average of 98. And the market cap, the size of the companies is about 6 billion. So it's a bit smaller, still getting some of the smaller companies. Starting to see a few of the smaller companies come in. And then for AJ Bell, list of 20 stocks with the tickers. Stock ranks ranging from 100 down to 98 and an average rank of 99. And the average market cap is 5.8 billion. But you're starting to see a lot more smaller companies. 23 million. 91. 82. And the smaller companies can sometimes generate big growth. So there's our lists. So we've identified our stocks, and I'm going to use the Free Trade Basic ISA account because I'm really passionate and really keen about getting as many people investing as possible. And that's the one which offers least costs and is more accessible. So now we've worked out which stocks we're going to use, we know which broker we're going to use, we need to work out how many of each share we need to buy to build our portfolio. So that's what we'll look at next as we try to work out how we allocate our funds to each share. So what we have here is a little spreadsheet in Google Spreadsheets that I'm going to make publicly available to you to help you with the allocation of your funds when you're ready to buy the stock. And I'll walk you through how it works. But first thing we need to do is make a copy. And you can call it whatever you want. So it's going to be UK low admin portfolio. And let's call it April 2021. And you're going to store it on your drive. So we don't get confused, I'm going to close the old window. So here's the spreadsheet. There's some instructions over the right hand side. First instruction, make a copy of this spreadsheet. The second thing we're going to do is find our list of stocks that we're going to purchase, our candidates. We're going to select the tickers, copy them, Control C on a Windows laptop, come into the top left ticker box, paste special, values only, and paste the values in. And now you can see suddenly the table populates. The spreadsheet is updated with the names of all of the companies and their latest prices in the market. So just double check that the names of the companies match the ones that we're looking to buy. And go through the list and check that that's okay. The next stage is to adjust the funds available to invest. So at the moment I've just got this set to £1,000. So for today's example, I'm going to use £1,000 of my own money to invest in this strategy, so you can see what this looks like, you know, in practice. And I want to try and be as completely transparent as possible. And what this spreadsheet is trying to do is help you decide how many shares you should buy in each of them. So to do that, it needs to work out a few things. First of all, it needs to know how much money you've got to invest. It has to understand if there's any taxes or you know, stamp duty relevant to your area. In the UK, that's 1/2%. It needs to work out how many holdings you have or you're looking to buy. And then it calculates after tax how much you should spend on each stock. So if we've got £1,000 with 20 stocks, taking into account 0.5% of tax, we should be spending £49.75 on each stock. The tricky thing is that the share price for each stock doesn't divide perfectly into £49.75. So 13 shares of Forexpo at £3.58 gives us a cost of £46.81. So there's about £3 of slack there that we've got. And what this spreadsheet is trying to do is to highlight in this column, using the colours, which ones are under or over this value. So what it says to do now is to sort the table by descending share price, column C, so you can see the most expensive stocks on the top. So that's easy to do. You just go to this, column C, you just go to this arrow, you click it, and you go sort Z to A. And now you've got the most expensive stock, Rio Tinto, at the top, all the way down to the lowest price stock, ITV. And if you look at Rio Tinto, look what's going on here. Actually, we're going to purchase none of Rio Tinto because it's £56 a share, and that's over what we've got here. But we're only spending £837 of our £1,000 to invest. So the next stage is examine the highlighted stocks in column F. And what the highlighting is trying to show is where a stock is underfunded, you're not buying enough of it, or as we adjust things, you'll see it also highlights where we're paying a little too much. The problem we've got at the moment is we're only spending £837 of our £1,000. So what we're going to do is the next step now, which is experiment with adding an extra stock to the proposed number of stocks in column D, but keep an eye on this total cost, as we don't want this to exceed £1,000. And you really want to start with the stocks that have the greatest difference with the target cost. So here, this is a no-brainer. If this stock was £200, we wouldn't be able to buy it at the moment. There's no fractional shares in the UK at the moment, certainly not on this free trade basic platform anyway. But it's only £56, so it's only £6 over. So I'm actually going to buy just one of those. And straight away, it's highlighting in orange. Actually, you've gone over this value. But for now, I'm going to let that ride. The next stock that's significantly far away from this £50 thing is Pantheon International. So I'm going to buy two of those, and that takes it to £55. The next one, I think, is Johnson Matthey. I'm going to buy two of those. That's pushed right up to 63 now. We're still under our limit, so we're okay. Which one's next? Bellway, £72. So that's a big jump now. So I'm not particularly happy about that. So I'm going to undo that with, you can either use the arrow keys, undo, or you can press Ctrl Z. So I just undo it and it goes back to £36. What's next? If I'm not going to do that one, then maybe this one, Morgan Sindall. So I'll buy three. 972. Okay, that's good. And then the next one, IMI. Let's buy four. Can I squeeze another one in? Let's buy 5 of Grafton. 997. So I'm really close now. Even if I try and increase one of the small ones down here, for example, for Expo 14, I break my budget. So I can't do that. So I'm going to undo it. What I could do, I suppose, is buy 42 ITV, or maybe 43. There you go, 43 ITV. So now I've got my list of companies and how many of them I'm going to buy, or how many I'm going to try and buy. Because what you'll find is this price might not always match the quote you're getting from your broker, but I'll show you that as we go along. Okay, so we're really close to purchasing our stocks now and taking our first steps in the stock market. Today I've shown you how to screen using the Stockopedia screening services. If Stockopedia is something that you like the look of, it takes all of the hassle out of factor-based investing. You'll find a referral link down below where you can sign up for a Stockopedia account. You'll get 25% off your first year's annual plan. I then took you onto the free trade broker platform to show you how you could search for stocks to see whether your broker supported the stocks that the screening process had identified. Again, if you're interested in a free trade account, There's a referral link again down below. If you sign up for a free trade program with the ISA or the Free Trade Plus account and you use my link, you'll get a free share and I'll get a free share, somewhere in the range of £300 to £200. It's a bit of a lucky dip apparently. So once we'd identified our stocks and checked which ones our broker had available for us, we then looked at an allocation strategy of working out how many of each shares we needed to buy. And I showed you a little spreadsheet. Again, please check down in the description below. The link for the spreadsheet will be there on my Google account, which you can copy. If this video has been helpful for you, which I really hope it has, please give me a thumbs up. It really, really helps with the YouTube algorithms, or and if you'd like to subscribe, that would be fantastic. You can be notified of when I produce new content. If you've got any questions or any comments or observations, please just pop them below and I'll try my absolute best to answer them. I have social media accounts too, on Facebook, on Twitter or on Instagram. Feel free to make contact with me and I'll try my best to answer your questions. In the next video, we'll be looking at the actual purchasing of the shares, and so then you can call yourself an investor once you're at that stage. So hope to catch you then. Bye for now.